Hello and welcome to another Forex Examiner Forex Trading tutorial. In this Forex Examiner Forex Trading tutorial, we're going to cover the all-important topic of Forex trading tips. And these are tips, things to keep in mind that were gleaned from some of the most successful traders in the world. That includes individual traders as well as institutions, hedge funds, etc. So, without further ado, let's pop right into some Forex trading tips. Now, these may be some you know, some you don't know, some you may not have thought about that much, etc. But let's dive in and take a real quick look. The first tip, of course, is to control your risk. Oftentimes, Forex trading is looked at and presented as an income opportunity. And in reality, it is an income opportunity, but only for those people who know what they are doing. Otherwise, it isn't an income opportunity. Forex trading and all trading in general is speculation. And speculation always involves risk. Controlling your risk is extremely important. Now, you may have heard of a book a while back called Wealth Without Risk. And the title was masterpiece with regard to marketing and a great hook and a catch, because it appealed to people that didn't want any risk involved but still wanted a reward. In reality, in life, that's just plain old unreasonable. There is no reward without risk, period. There simply isn't. Imagine yourself crossing a very busy street downtown in a large city, say Los Angeles, New York, whatever the case might happen to be, and you're there and the light doesn't say walk, so you stand and you wait until it's safe. You're controlling your risk by obeying a set of rules set to assist you in controlling your risk. Now, there's always the off chance that there will be a car that runs the light. It's very, very, very outside chance. For the most part, if you obey those rules, you have controlled your risk and you should be able to cross the street safely. In Forex trading, there are certain things that we must do in order to trade successfully to control our risk. And there's no exception to controlling your risk. You don't control your risk, you don't succeed in Forex. Very simple formula. Understanding the mechanics of trading, understanding the mechanics of your trading platform. Now, your trading platform is how you place your trades. It's the software that you use to place your trades. Now, this may be browser based. You may access it using your web browser, or it may be software that's installed on your computer with whatever operating system you happen to be using that links up to your broker. Now, the valuable thing about a Forex demo account, or as they're called, a Forex practice account, in this case, is that it does help you to understand and learn the mechanics of trading. You need to know how your platform for your particular broker works. This means that if it's time to buy, you need to know where the buy button is. You need to know how to enter the prices you want to get in at, the different types of orders, etc. Are you trying to get in a limit order, market order? Are you trying to buy at a buy stop, sell at a sell stop? Are you closing out a long position, entering a short position? These types of things. And the more you do these, the better you get at them. So, moving on. Mistakes happen. None of us is perfect. And you can actually hit the buy button in your trading platform when you meant to hit the sell button. It's a mistake. It's a simple mistake, but again, mistakes do happen. Rather than sit there like a deer in the headlights wondering what you should do, this is what you should do. You instantly correct that mistake. Period. No second guessing, no hoping that it's going to go in your direction, etc. Don't do it. Close a position out. If you bought when you meant to sell, close out the buy position, turn around immediately, open up a sell position. If you sold when you meant to buy, Close out the sell position, immediately open up a buy position. This will save you a lot of headaches and grief, because what can happen is you can wait for the market to go in your direction and end up with an absolutely catastrophic loss when you give it more and more and more room. Listen, admit your mistakes. Take ownership of them, reverse them into doing the right thing, and be on your way to successful Forex trading. This is very common. Abandoning a strategy that works, a Forex trading system that works, is common amongst those who are starting out. Why is that? Well, expectation levels. People sometimes expect to make a great deal of profit in Forex trading before they even know what they're doing. That, of course, is tremendously unrealistic. People who know what they're doing don't always make a profit on every single trade, of course. But it is common for new traders, for some new traders, let's say, to have what we call shiny object syndrome. That's bounced from the next new fantastic make me $1 million in a week, starting with a $1 account, a Forex trading robot, Forex expert advisor, Forex trading system, Forex signal service, etc. If there's a system that you have that is working, then it stands to reason that you should keep using it and not abandon it. In fact, if it's a system that works, why would you abandon it? That doesn't make sense. Don't do things that don't make sense. Just follow what is supposed to happen by exercising your discipline, and your discipline will keep you focused and keep you trading that good trading system so that you can build equity and use Forex trading for whatever your purpose might happen to be. Again, back to the same thing of discipline. Do what your trading system tells you to do. It's like this. It's like your trading system, just say it's a mentor, a coach, a teacher. Why would you have a mentor, coach, or teacher tell you something or enlist their aid if you weren't going to follow their instructions? Same thing happens with the trading system. Now, the challenge here for many people, of course, is knowing if they have a good trading system or not, and that's a completely different topic that we'll cover in Forex trading system evaluation. That's very handy for everyone, whether you are interested in commercially available systems that you didn't create, or you're interested in creating your own trading strategies. Knowing how to evaluate systems is very, very important. But once you find a system, once you create a system that works, simply do what it tells you to do. If you don't do what your system tells you to do, then if it's a good system, you're not going to be successful with it. It's that simple. It's like having a road map and going in the opposite direction just based upon your own whims. That doesn't make sense. Learn to take losses. This is a tough thing for many people starting out as well. It was tough for me. I didn't like losses. I was so used to things going so well and moving in my direction in everything that I did, that losses on a regular basis were something that were completely foreign to me. But taking a loss is part of successful Forex trading, simply because there is no such thing as a 100% perfect, 100% profitable, 100% profitable trades Forex system. If there is, hey, contact me. I'll take a look at it. Probably, maybe it has some holes in it somewhere. But the key here is take losses, as losses are a natural part of trading. Sometimes your trading system is not in sync with the market, and as such, it's going to buy and the market's going to go down, or it's going to sell and the market's going to go up. These things happen. The key here is that the sum total of your winning trades is greater than the sum total of your losing trades, and that is how equity is built. Don't expect miracles. We mentioned the $1 million in 1 week, starting off with $1, running out to buy your own private island. And I completely understand why people starting out might feel that way. You see all of these people that just seem to be doing so great. Oh, I made $1,000 yesterday. I made $545 in 10 minutes, and etc., etc. Well, those change your expectation levels. Those types of things change your expectation levels. So you can't wait to jump in on a system like that. Well, here's the deal. A day of trading that's successful, or having 15 minutes that you made $500, or having a month or a couple of months, that can even happen with the worst possible trading system in the world. I may have to rethink that, but just off the top of my head, if you think about it, heck, even a broken clock is right twice a day. So even completely broken, designed with flaws inside, doomed to failure, Forex trading strategies, etc., will be right from time to time. So don't expect miracles, because in the real world of trading, there are losses, and there can be frustration from strings of losses. These things are natural. So don't expect to make 1,000% per month if you haven't made 1,000% per month before. Ask yourself this question: what makes me think I'm qualified to make 1,000% per month? Start off small, start off slow, learn Forex trading, and move forward from there. This is really a tough one for some people to swallow. Just because your trading system bought the market doesn't mean that the market is going to go up. You can't look at it and go, that market should have gone up. It's like, okay, no, the market's right. So whatever's happening out there, the combined psychology and economic forces that drive the Forex markets make it right. They become reflected in the price, and just like the game show, the price is right. So the market's always right. You are playing the market's game. The market is not playing your game. It's really that simple. So you're in there, the market's available to you, and there's tremendous profit potential in Forex trading, but just get through your head not to expect miracles, that the market's always right, learn to take losses, and some of these other tips that we've included here. Take a break from the markets. You don't have to trade every single second of every day to be successful. Taking a break from the markets is actually quite healthy. You'll find your perspective and objectivity renewed, which is tremendously useful in Forex trading. Gaining unhealthy biases, etc., from being too close to the action sometimes is not necessarily a good thing. Now, it may pan out in your favor, but taking a break from the markets, also, you want your health as well. So, take a break from the markets, go take a walk. Don't skip meals. Stay healthy. Okay, stay healthy, and especially if you happen to be sick or not feeling well or unempowered or any of those things, like you're not going to do what you should do that day. Take a break. Take a break. Come back. The markets are going to be there always. There's going to be plenty of things to trade, systems to trade, etc. So if you happen to go and take a break, have no fear. The markets will be back when you return. And last but not least, never stop learning. Learn to trade Forex. Learn to forge your own path. And learn to do your own analysis, your own research, in order to be successful in Forex trading. I certainly hope that these simple and by no means these are by no means complete breakdown of some of the top Forex trading tips has been informative for you and will help you in the future. Good luck, good trading, and good life. Thank you for taking the time to join us for another Forex Examiner Forex trading tutorial. Please feel free to come to our website at www.forexexaminer.com for more Forex trading tutorials as well as a wealth of great Forex trading information. Thank you for joining us.